see if I could. Guess I'm gonna watch this. Okay. What's going on, everybody? Welcome to another YouTube channel video. I really appreciate you guys supporting. I really appreciate you guys sharing my video. Today, I want to kind of like run down top-down analysis on how I caught GBPUSD this week, and how I want to teach you guys how to be patient and waiting on your setups. I think it's just very important that we just understand that the market is very fractal. It moves in different ways, it moves at different times, and it's traded by different bank institutions. So we just really need to keep in mind that um, the market moves in waves, and you're not always going to catch a winner, and sometimes you're going to take those losses. I took a couple of losses this week, but my gains were still big, and they still topped my losses because risk management is very important. Um, so let's I don't know why I got another open window up. Here it is. Okay, cool. I got two open windows. Um, let's kind of look at this for a second. Put myself down here. All right, so let me start with a clean chart. I love using Owanda or Owanda, whatever you call it. But for a cleaner chart, I'm gonna use FXM. All right. Let me go ahead and just delete this. All right. So some of you guys are probably like wondering, okay, Jonah, like, how do you do your strategy? Look, this is I ain't no financial advisor, I ain't no expert, but this is when I want to kind of give you guys some advice on. Like, find a strategy that suits you, not a strategy that you're trying to copy from somebody else, but a strategy that suits you and it's your strategy. Okay, it's okay to get different. It's definitely okay to get different strategies from mentors and kind of look at their analysis and kind of figure out, okay, how can I fit this into a strategy that I'm looking for? But at the same day, um, excuse me, at the end of the day, it's the same day. Excuse me, at the end of the day, you are going to have to come up with a trading plan along with your own strategy. Um, and I like to swing trade. I also like to scout from time to time. Sometimes I like to day trade. I have all sorts of strategies, but I normally typically stay with one or two strategies because I have realized that it's kept me profitable, and it's kept me patient in the market. And I don't like to rush into any trades because 9 times out of 10, when you rush into any trades, you end up losing. And the goal here for me is to win on the highest probability trades. Okay, so this week I kind of like just really been analyzing the markets now. Shout out to my boy Luke, Decipher FX. You guys can look him up. I usually get my swing trading information from him. So I'm gonna kind of like just break down a little bit like what I've seen on GU, what he has seen as well, and it kind of like just really gave me the bigger picture of being now. So see here, we see on British Pound USD, we see that the British Pound USD is on a downtrend. It's been on a downtrend since December 2007. So some of you guys are probably thinking, well, why are we selling when there's obviously a lot of bullish momentum? Well, that's a good question, and that's something I'm going to answer here in just a second. But we all see that the British pound US dollar is ultimately in a downtrending market, correct? So ultimately, if you really want to be profitable as a swing trader, you want to sell this market. Now, I've been buying and selling this market. Why? Because once you start to figure out what the market is doing overall, the way you trade, it doesn't matter. As long as you know. Now, we will never know 100% what the market is going to do. Okay. However, when there is a pattern that continues to repeat itself, it becomes obvious. And when something becomes obvious, then you can definitely go from there. How can you profit based off of what you are seeing? Okay. And based off what the market gives you. So even though British pound US dollar is ultimately sales, we also have a big uptrend up here. Okay, so we obviously seen a lot of bullish momentum. So if you're a day trader, if you're a scalper, you're definitely buying GU and not selling because you're in and out. And every day you're seeing that the market is creating an impulsive move, coming back to correct itself, impulsive move, coming back to correct itself, and then now GU is now creating lower highs and lower lows. So some of you guys are probably wondering, like, well, why were you buying British pound US dollar? Well, I want to stop down, excuse me, I want to drop down. No, I'm not going to drop down to the daily yet, but I want to start here. I'm going to start here. In one of my videos I showed at the time, the market was right here. Okay. So the market came past this resistance, came back down. Oh my gosh. Hold on for a second, guys. The market came up here, broke through this resistance, came back down, came back up, touched this line of resistance again, came back down, came back up, touched this line of resistance again, right? Came back down, came back up, touched this line of resistance again, came back down, and now it just flew right past it. So here's a tip I want to give you guys. Anytime you see a repetitive thing happening at the same level, areas of resistance or support, we call that obvious levels or obvious zones, which means there's no way that the market, and it could, but a lot of times, majority of times, the market is not just going to reverse off of an obvious level. Shout out to my boy Luke, Cyber FX. He gives a lot of information on that. It's just not. And the reason why is because where the obvious is, they're not going to give the people or retail traders or retail herds that much profit. And they're going to induce them in a certain way so that they can take their profit. Look, that's the game. The game of Forex is somebody has to lose. Okay, somebody has to lose. You don't want to be that somebody always losing. Okay, and this is the reason why retailers lose because they don't look at top-down analysis. So we know we see that GU is down. We see bullish momentum coming up, but you also see that the resistance level is being tapped too many times. You know, it's kind of like you taking take a stick, just keep hammering away hammering away at a window. Well, if you're hammering away at the window and then you're taking the stick, eventually you might crack the window. When it becomes cracked, it becomes more weak, and then the more you start hitting that window, and eventually it's going to break. So it's kind of like you see it like that. The more that it's just keep hitting this resistance, eventually it's going to break through. Now, I say that to say this. So if I'm seeing that the market is obviously creating a level of zone here, and I'm drop down to my weekly, okay, I'm like, okay, well, the market is bullish. All right. Now, if the market is bullish and I know it's continuously hitting through this resistance line, then I know for sure that I'm going to stay bullish until it gives me a reversal pattern at an area of major structure. Right now, GU's about GU is retesting 137. Got to 137. It's retesting perfectly off of 137 and possibly heading on its way back down, possibly all the way down to these lows, because that's their first area of induction that the British pound US dollar has started. I believe this whole buy right here is just all induction. Now, if you're a scalper and day trader, you're making money off this, especially if you're buying. And though I'm a swing trader, I love to scalp sometimes, and I love to day trade. So yes, I've been profiting off of GU this way. So as soon as you see, it's very important to understand what the market is doing, because if you don't understand what the market is doing, then you're definitely not going to profit in this market. I'm just saying. So this is the reason why I'm buying. The market is going up. It's going up, creating higher highs, higher lows, higher highs, higher lows, keep hitting resistance, constantly keep hitting resistance. That means it's probably wanting to go up to another level of area structure, which is probably around 142. I'm going to leave it as 140. Whole numbers. That's where definitely where the market makers just love to bring the market up to. It's these round numbers. Also, if you go to the daily time frame, now, let's just say, okay, let's just remove all this. Let's just say, hey, Jonah, I just want to keep buying and keep buying and keep buying. Well, the issue with a lot of traders today is not that their analysis is wrong. The issue with a lot of traders today is they aren't patient enough. A lot of people will rush into the markets because they aren't patient enough. And this is why I've been trying to tell a lot of people, if you aren't patient, especially if you're not a scalper, if you aren't patient, you're not going to win. You're going to feed off into the market. You're going to give the market what they want. The best thing that you need to do is sit back, analyze from top down analysis, whether it's monthly, weekly, daily, 4 hour, 1 hour, whatever it is, what particular trader you are. If you are a swing trader, you got to look at the monthly, weekly, and daily, and then start looking for entries off your 4 hour, 1 hour chart. Point blank. If you're a day trader, you look at the daily to the 4 hour, all right? And you look for entries on your 1 hour or 15 minutes. If you're a scalper, you're looking at the 4 hour, 1 hour, all the way down to the 5 minute, 3 minute, 1 minute, whatever it is. And you're looking for your entries around 5 minute, 1 minute, 15 minutes, depending on how you like to look for your entries. So it's very important that you know what particular trader you are, because if you don't know the particular trader that you are and you are analyzing it the wrong way, even if your setup becomes right, your entry and your timing is pretty important. For swing traders, it's not really, timing is not really the thing, but structure is really where is that. Corrective structure is where is that. When you pull backs, the traps, that's all like important for us. But for people who are scalping, it doesn't matter to you guys because you guys are in and out, in and out. So this is how I like to do my swing trade. So we obviously see that the market is a bullish momentum, right? What is it doing? It's creating higher highs, higher highs, right? Higher highs. Even if it comes all the way down here, it still hasn't passed this level of structure. Comes all the way back up, higher highs. Okay, still hasn't passed that level of structure. So it continues to create higher highs, higher lows, higher highs, higher lows. Okay, that's what the market is obviously doing. So what I like to do, and this is just a nugget, is you just do the simple thing, and I'm telling you guys, it will really, 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 really help you profit. So I like to create a trend line level. So for example, this week, let's see if I want to use this chart just to explain it all. It might be too much for you guys. Yeah. This week, you can clearly see that GU is, even if I was to create a trend, a lot of retail traders would be like, okay, like, let's create this trend. Go on a 1 hour time frame and just start selling. Although that you might be selling off this trend, and that's totally fine. Like I said, if you're a scalper, for you, that's totally fine. But for us who are trying to swing the market, we're trying to be careful where we're buying, selling, and everything, and we're just being very patient. We are waiting for the highest probability setup. Okay, so we see that this is in a what is in a downtrend channel, but what we're forgetting is that the market is moving in which direction on the 4 hour and 1 hour time frame. After I told you the fact on the monthly and weekly, that is probably more than likely not going to reverse at an obvious zone. It's going up. So I'm looking for what? Only buys. Now, can you sell and buy? Absolutely. So this is what I do. I create that zone, right? I create that zone. I look at where my support level is. Okay. This was my area of support over here. And this is all I do. Sometimes I even throw on the 200 EMA. If it crosses back up with this 200 EMA, you can enter into a position right here, put your stop loss right below this wick, because what happened is, what did the market do? It blew right past my 200 EMA, but it came right back up and closed bullish. Okay, and your stop loss can be below here, and your TPs can be all TP can be all the way up here. At these highs. Okay, guys, it's simple. It's very simple. Like, you don't have to overcomplicate it. Even without the 200 EMA, Like I realized, okay, the mark. See, some of you guys are doing this. Some of you guys is like, this. I'm gonna tell you what trading is not. This is not trading. You got support here. This is not trading. If it breaks this, then it retests and then goes down. Or then this zone right here. It breaks out, retests and go up. That's not trading. That's guessing. Why would I want to sit here and guess what the market is going to do? I shouldn't be trying to guess. Even if I don't know completely what the market is going to do, I shouldn't be sitting here and be trying to guess. I need to analyze what the market is trying to, who they are trying to induce, and where the market is going opposite of the trend that I'm looking for. So if I know that for right now that the market is trailing up and it's been trailing up for a very long time, if the market is trailing up for a very long time, why would I be trying to sell? Okay. What you should be looking for is you should be looking for a sell to occur and allow that sell to happen. And then once it breaks back up, you look for entries. Okay. Because remember, I told you the market moves in waves. It does this, or it does that. Okay. Those are the three things it does. And if it's doing something obvious for me, then I know if I'm patient enough, I can wait. The market is going to give me what I want. Okay. So right here, the market starts trending, right? I'm not entering in none of this. The market starts trending. And once it broke my low, I'm like, okay, cool. There's two things that's going to happen. One, it's going to do what the retailers think it's going to do, retest the support and go down. Or two, it's going to come right back up, retest the level of support that it did break, which would be considered a false breakout, and then break my trend line and up to these highs. Okay, and that's all I did. All I did was waited for my setup to happen. And you can also look at structure and see at this trend line if it was to break, like where would be your retest. Okay, your retest zone could be here. Okay, if you really wanted to be safe. But for me, if it broke out of this area of level support and it came back up and closed, I'm buying, baby. I'm buying. That's gonna be my golden zone right there. And I mean, based off if you're swinging this bad boy, sometimes you could actually have a big stop loss. That's totally fine. It could be a 42 pip stop loss. It could be a 30 pip stop loss, as long as it's beneath structure. As long as it's beneath, excuse me, as long as it is your stop loss is beneath structure or under structure. If the market was to come back and stop you out right there, then your trade is invalid. Okay, or the market maker is just acting money. But more than likely, is the trade will be invalid. So once this market has came up, pulled back, came up, closed above structure, then pull back and then continue up, you can literally enter off this bullish candle and have your stop loss beneath there. That would have been a 20 pip stop loss. And then you just ride it on the way up to these levels, to this highest zone. You would have literally caught 150 pips. Now, some of you guys are like, well, that's not as easy as you think it is. No, it is pretty simple. You just got to wait on your setup. Some of you guys, this is what I see. Like I'm in some of these chats and some of these other chats, and some of you guys are so impulsive. As soon as you guys see a breakout, you chase it. Like, what if? I'm gonna give you a clear example in this 1 hour time frame over here. And this is, I didn't even enter this trade. I know some people did. Some people will say, oh, this is a breakout. It happened. Oh, it's going to continue. You have your stop loss over here or over here, over here. Look, this is liquidity zones. They know what you're doing. They know where your stop loss is. Oh, I'm going to keep moving my stop losses down. The market came all the way back down. You know why? Because you're not waiting on your confirmation. I used to do this all the darn time. I used to do this all the freaking darn time. I don't care what anybody say. Unless you are a scalper, don't do that. If you're gonna scalp, you better scalp this whole bullish candle and get in and get out. That's all I'm saying. Me, if you're trying to wait for a clean setup, you can't do that. You gotta wait for the market to do this. You gotta wait for the market to come up bullish and close. Okay. Look, if you are going to enter, I'm gonna do this. if you are going to enter off of a candle that closes bullish, move this. If you're going to enter off a candle that's going to close bullish, guys, you know how the market works. It's not just going to just do this all the time. I mean, it could, it could, but the harder the push, the harder the pullback. So your entries are very important. So if you're going to see it close like that and you enter at this top, you're going to be 60, 62 pips probably in drawdown, let alone 40 pips in drawdown, and the market can do this. Now, I've seen this happen a ton. Oh, crap. The market could do exactly that. And then what happens? Uh-oh. Hold on. All that liquidity stopped out. Okay? All that liquidity stopped out. You don't want to be that trader. You want to wait on your confirmations. So anytime I see a bullish candle, if you didn't get in at this area, use your trend line as confirmation. Okay? If once it breaks your trend line, look, this is an area structure right here too. Right here is an area structure. If you want to be really, really, really technical with it, this is another level of area structure right here. If you're looking for a buy, you see how this candle right here closed bullish. Okay, it closed bullish, but what did it do? It had immediate pullback. Okay, and even though it was playing around in this area, to me it was a confirmation it was going to go up because it closed bullish above my candlestick pattern. And alongside of that, it closed above my support level. Two confirmations that's letting me know that it's going up. So you could have entered as soon as this pullback happened. You could have entered right here, like, man, that's a fat candle. Put your stop loss below here. You probably would have been, let me see, just right, probably right here, 37 pips. If it came down there, it would be 37 pips. But literally, you probably be like half of that in drawdown, and then immediately into little to no drawdown going on the way up, 123 pips. And that's what I'm saying. I don't understand why people do not want to be patient. I see so many people in certain group chats. I'm in a ton of different group chats, and I see how they're so impulsive. Hey, where are we buying here? You selling here? I don't know why people don't want to wait. I'm going to give you this sauce. I'm giving you this video to kind of help you. Now look, I lose too. I lose too. But when I lose small now. I used to lose so big. Like not about a month ago, I used to lose. 2 months ago, I used to lose. 3 months ago, I used to lose. And it's not because my setup was right, it's because two things. One, I was impatient, and two, my risk management. Okay. Now that I lose, my risk management is perfect. I could have 50 losses and 20 wins, and my wins will be bigger than my losses. Why? Because my losses are small, my wins are big. Okay. Even here, see? And look, just even if you guys want to use fibs, it's like, oh man, yeah, look, man, even indicators, like once it shifts out this trap, you good. You can use your Fibonacci. You see it's obviously on a, what, let's not use that. Let's not use that. It's not really good to use on other smaller pairs. It's pretty good. I don't really use fibs like that, but I know a lot of people who do use fibs. If you use it the right way, even when you see your confirmation, I'm telling you, it will work for you. And even down here, like some of you guys are like, oh, well, Jonah, like, how can I catch, another swing move if I miss it? Okay, well, you do the same thing. You come over here on your 1 hour. I like to use a 1 hour time frame. You see, this is key. When it's selling like this, that's telling me that it is inducing more traders, especially when it's London. A lot of times you have this consolidation, breakout, London, and then New York. Consolidation, breakout, London, and then sometimes New York. It's usually, now sometimes it will continue, but a lot of times, you will see that reversal happen. So once I seen that it was confirming on my support level that it was no longer want to do some sellers at right here at 8 o'clock, right here at 8 o'clock, New York session, and then 9 o'clock. What did it do? It created a big bullish candle right here at confirmation. This is where you want to put your other level or structure at. Let me go ahead and delete this. Look, guys, I mean, I can break it down simple to you. It's pretty simple. It's it's not super simple, but it's I don't know how to say it. Like, don't make it complicated, is what I can say. It's simple stuff. Like, if you just wait, you can get some good entries. But this is a level of structure too. It broke out of my what? And I like to keep mine clean, my trend lines clean. Broke out of my, it broke out it clean. Now, I would probably, if it rejected this area real hardcore and then went up, that's when you can buy. And you could have put your stop loss below here. So in a situation when you see this bullish candle, like respecting this level of area, let me see. I don't think, nah, my computer should be acting. That's what it was. Okay, here it is, guys. Sorry. Once I saw that off my support level created this W after this M, I knew that it was reverse time. But a lot of times you will see sometimes where it starts rejecting that resistance level of area level structure, and it won't like necessarily like blow past it. Once you see this rejection candle happen, and then you start seeing that it is rising above the level, it's safe to enter because I know that the markets want to head on up. If you're scalping or day trading this, you would have gotten at least 50 pips. Okay, so that's why I just think it's just very important, like to really like break down structure. And look, you could do this as many times you want to, guys. You could do this. Let me see. Pretty sure. Nah, this ain't the one I was looking for. I think it was this one. You could do it here. Same thing. Guys, if you just back test just a little bit, don't back test 1,000 times and say, oh, this is going to happen. But if you just do this here, guys, and if you just say, hey, I just want my TP right here once the induction happens, I tell you again, oh, you know what? Same level of structure. I tell you again, what is the market doing? The market is creating more downward movement and just waiting to bust on out, right? And what I tell you guys, I tell you like I said before, level of structure right here. You see all those wicks. What it do? It still closed a little bit above right here. On an hour time frame. Man, guys, this changed my life right here. We tested perfectly off this trend line. You could have put your stop loss below that wick and rolled it all the way up. 184 pips. Well, if you're running up to the high, it would have been 100 pips. It would have been 100, 108 pips. So if you really look at that, now right now I'm in GU sales. It was Friday that I sold this. And the reason why I sold it Friday because usually on Fridays, like they start, once a certain trend becomes super obvious, especially on the small time frames, bigger time frames, like, and I saw this M happen, I'm like, oh, I'm hopping straight in and broke my level of structure. And it kept, if you realize this is a level of structure that's also obvious, and it kept buying here, I knew that it was getting ready to blow through this, especially on a Friday. And I entered here, had my stop loss above here, and I'm holding over the weekend. I'm about like 50 pips. Well, right now I'm probably like 35 pips in profit. I'm probably looking to close once the market open. If it retests and it continues down, I'm gonna enter again, and then who knows? It might come back and still blow all through this structure, or it can keep going back up. I don't know. All I know is like I just want to kind of like show you guys a strategy that'll probably help you remain patient. Look, guys, I don't wake up for London. I don't just wake up right at New York. I'll wake up whenever I want to because this particular strategy helps me be patient and look for my setups. Okay, some of you guys like, well, Jono, well, what if you miss news or anything? Okay, you miss news. Okay, cool. I don't care. Like, you know, if I want to be free in trading, then I got to make sure that I want to be free whenever I want to trade. Okay, I don't have to be a slave to the market. Some of you guys are like enslaved to the markets. You don't need to be enslaved to the market. Okay, it's okay to wake up at New York session, totally fine. It's okay to wake up at London session, but if you want to wake up every day and you tired and you're like, oh, I'm lost this money, lost that, lost this, lost that. I'm tired of waking up for 50, 60 pips a day. It's not enough. Okay, then switch up on something. You know, me, I wake up whenever I want to and I trade. So I tell people this all the time. If you see this big M happen, all right, even though you see this big stop hunt, that's usually a sign that it might come back, retest this neckline, and then continue down. But look, guys, sometimes the market does this. Sometimes the market does that. And that's why it's so important, like this. Or, you know, I'm doing this because a lot of times you guys are trading M's and W's. You know, the market knows obviously that a lot of us love to trade M's and W's. I don't trade M's and W's. Go look up Decipher FX by Luke, and he'll tell you everything why you should not be trading M's and W's. And I recommend you to look out his PDF. And this is the reason why. A lot of times the market knows these M's and W's always happen. No, if it's an M and W in the overall direction, I can understand that. But here's the thing: a lot of times these M's and W's are bait. So for those who are selling and their stop losses are here to here, remember even when they retest the neckline as you're taught, right? And you know continuous bearish, you know all your stop losses here. Look at all this liquidity, and then people are just putting in the bluff, and then all of a sudden the market does this. Just like GU. It does that all the time. It doesn't matter if you this is a big M right here. Okay. Well, doesn't matter. The market does not care about your little M's and W formation pattern, your M's and W strategy. They don't care about that. If you're a scalper, okay, you might be cool. At the same time, it don't matter. They don't care about your little M's and W strategy. That's the reason why these patterns are in the market, because they are deceiving you, some of you guys. The same way with this. Oh, I'm put my stop loss below here, you know. Yeah. That happens too. So this is what I do. If you're going to wait on an M and W formation, wait for the M to create a stop one, okay? Confirmation, your second leg is higher, okay? You want it to pull back, okay? And then once it finally engulfs the previous candle, then you can put your stop loss, okay? But some of you guys are doing this. Some of you guys are doing this. Oh, I'm gonna enter here, I'm gonna enter here, I'm gonna enter here, I'm gonna enter here. Excuse me. Stop losses are going to be up here, but I'm gonna enter here, and I'm put all my stop losses above here. And then as soon as you think you're okay, boom. Okay. I'll always wait for it. Let the M fully finish its route. Don't chase all this. Let the M pull back. Okay, whether it's to this neckline or whatever, and when it finally completely engulfs, then you enter. Some of you guys don't even wait for it golf. Some of you guys just wait for it to do this and then it'll go right back up. You guys got to wait until it completely engulfs. And I look on that in a 1 hour, 4 hour time frame, because a lot of times on the 15-minute and below, it fools you guys. It'll fool you out. And I said earlier that some of you guys are like entering based off the neckline, and it does this. What I really meant by that is if you're going to enter at the neckline, if you guys are going to enter at this neckline, when it does this, okay, don't just enter just because it touched this line, okay? In my opinion, wait till you see a bearish momentum confirmation, then enter. You might be in a little down, but it'd be best that you do that because you're getting confirmation, okay? Because this backboard can continue to trickle up, it can come back down, and then it can trickle back up, and then all of a sudden it stops you out. It's the same thing with the W formation. So this is the information I want to pass along to you guys, and I hope this video really helped you. If so, subscribe, like this YouTube channel. Definitely share this with your friends, your family, or anybody else that you trade with. I wish you the best luck next week. Let's get to the charts. And I'll be back with another video very soon. All right, guys.